Hey, it's Pete, and welcome back. Tonight, we're going to talk about swing trading. Last time, we did a really long presentation on setting up your day trading career. Tonight, I'm going to walk you through from start to finish, literally everything that I do to have a very stress-free environment for putting on swing trades. Even though there's overnight risk and geopolitical things going on right now, swing trading stocks, to me, is probably the world's greatest business. No nights, no weekends, no holidays, no employees, all of those kinds of things. So we're going to get right into it. I want to respect your time. What we're going to talk about here tonight is probably the biggest mistake I think that most people make when they are trying to improve their P&L and trying to become the trader that they know they can be. The stock market can make you doubt yourself once in a while, but tonight I'm going to make a big argument for the fact that I think that most people are chasing the wrong goals and trying to improve the wrong skill when they are trying to swing trade stocks. And the big thing that we're going to talk about here, and I'm going to get right into the actual step-by-step process in just a minute. I'm also going to show you the portfolio. I want to kind of flip on its head what the actual skill is that you should be pursuing and why more chart reading is actually taking you on a hamster wheel where you always feel close, but you never quite break through the swing trading consistency that you want. And that's a big thing we're going to talk about here tonight. And by the way, if you have any questions, you can either put them in the chat or put them in the comments below the video. I promise I will get back to you as soon as I can. If you're here live with me, that's fantastic. So say hello. Let me know who you are and what your goals are and why you're swing trading. So here's the big thing. I want to dive right in and show you the entire process that I use literally from start to finish, right from trade idea and research all the way up to how I manage those swing trades using something that I call the profit maximizer on those longer term trades. Hey, Barry, how's it going? Great to see you here today, as usual. All right, so let's get right into it. I want to respect everybody's time. One of the first things I want to do, obviously, everything we talk about here is for educational purposes. It's up to you to make the final decision. It's my goal to help you see things a different way and maybe help you make some better decisions, okay? All right, so tonight's agenda, we're going to talk about the illusion of chart mastery and why it keeps swing traders kind of stuck in that one little box that are not necessarily taking them in the direction that they want to be. I got to say hello to Stephanie. Stephanie, how's it going? Great to see you. I hope things are amazing for you. Goal number 2 for tonight, we're going to actually talk about what actually drives swing trading success. And I actually want to come back on the screen and talk about something that you might not believe yet, but I promise you it's possible. And that really comes down to, in order to make big money, and let's just say that's why we're here, right? We want to make big money. We want to make consistent money. Let's put those, let's dream a little bit. Big money is relative for everybody. The stock market, it means different things to everybody. Some people want to quit. Some people want to quit their job. Some people want to do this full time. Some people want to manage their 401k or their IRA through stock trading, specifically swing trading. Let's dream a little bit, but let's put those dreams into context so that everything we're talking about here tonight is actionable. And the actionable part is that you do not have to take big initial risk on your swing trades in order to ultimately make big outsized profits relative to the risk that you have to take. I think one of the biggest misconceptions, other than trying to be a better chart reader when you should actually be trying to be a better trader, is that there's this misconception that you have to start big in order to make big money. And that's just absolutely not the case. And I'm going to show you a couple of things here tonight. That one thing, I promise you, learning how to build positions and work your position size can completely change every perspective that you have on the stock market. And it was one that I had the wrong perspective on when I first started trading as well. But once you understand this and understand how to implement it, it literally changes everything and your stress level goes way down and it becomes fun. Stock trading becomes so much more fun. All right. So the next thing, number 3 that we're going to talk about here tonight, redirecting your trading focus. And a lot of that has to do with moving away from more indicators and more moving averages and all those other kinds of things that really are not trading. They're actually looking at price action, but it's not the actual part of trading. So I want to kind of redirect your focus today as well. So the goal for today, the goal for this video, and there's a lot here, is you're going to want to watch this more than once and take notes. We're going to actually start at the end and then work our way back to scripting your trades to generate repeatable, reliable, almost predictable results. Now, clearly everybody who comes to the markets, the stock market means different things to different people. But I think that the one thing that is universal to everybody is consistency. You want to feel like you know what you're doing, you know what you're looking at, and you're the reason that you're producing the results. And that's what I'm going to give you tonight, step by step, from literally from start to finish. But before we do that, I want to get into show you exactly where all this is coming from. But in order for me to do that first, I want to take a deep dive into the portfolio. Now, the portfolio I'm about to show you is from the beginning of 2024. And I think one big thing that's going to shock you, which I hope shock you in a good way, is there's a healthy mix of wins and losses in there. I live in the real world. Stephanie and Barry both know me. Hey, Kenny, how's it going? Trading is about probabilities. And if you've heard me say this before, I'm going to say it again, that the best edge in the world, regardless of how you look at the markets, right? Stock market has many different ways of developing your edge. The edge literally means most of the time it works, sometimes it doesn't. And I'm going to show you what that looks like in our portfolio right now. So let me pull that up for you. And hopefully these are going to be some revelatory things that you're going to see, and maybe give yourself some permission to believe in yourself and that kind of stuff. So what I want to show you here, top corner over here, is the portfolio from, like I said, the beginning of 2024. The big thing I want to get across here, and you can see the actual gains and whatnot, these trades all started out with either 100 or 50 shares per trade. I want to be clear about that. This is not a monster position trade to get this. And this is kind of validating everything that I'm walking you through right now. So if you're thinking you don't have an account size that's really big, you want to start with what you have, because that's the resource you have right now. And then we want to work our way into all the things I'm about to show you here tonight. Now, here's the big thing. Again, these are all up-to-date open positions and whatnot. You can see there's plenty of losses in here. I'm not shy about showing exactly what I did, but what you're going to see are the gains dramatically bigger than the losses. And the only way that that can happen is two things. Number one is you ruthlessly get out of trades exactly where that swing trading plan said, kick that thing out. If the stock market doesn't do exactly what you wanted it to do, you kick it out, you hit your stop loss, and you move on. As long as you adhere to that and understand why it's so important, that keeps your capital intact in exchange for when you do have some winners, that you have outsized winners compared to the risk that you just took. And we're actually going to walk through literally step by step how to do this. Now, the other part of the portfolio that I want to point out here is the duration of winning trades compared to the duration of losing trades, and how much the winners do versus the losers. So we'll just kind of start out with the time period first. The average winner holding time is roughly 17 days, and the average trade that does not make money is roughly 6 days. So we're looking at basically a 3-to-1 ratio of how long winning swing trades work themselves out compared to the trades that don't. So you can actually see there that I kicked the ones out flawlessly, right according to the plan. I'm going to show you how to develop the plan right now. We're actually going to plug it into an app that we have. I'm going to show you how to get access to the app as well. The other thing is, when you have profit protocols in place, in other words, a strict plan for what to do with your winners, that's where the growth becomes almost astronomical, for lack of a better way of putting it, without putting on additional risk. And I'm going to show you exactly what that means in just a second. We're going to do an example. Maybe we'll use NVIDIA just as an example, because that seems to be the stock that everybody's talking about. So if you want, you can take a snapshot of this. I'll make it full screen here. So you can see 17 days holding the trades, 6 days, trades that don't work out. Average on the winners, $927. Average on the losers, negative 236. So you can see here, it's almost a 4-to-1 ratio of holding winning trades compared to the ones that don't. Now, again, I want to be clear here. The winners are outsized, not because I started those swing trades with bigger position size. They're because the market gave me positive feedback, and I worked that position in accordance to that positive feedback. Okay, this is all trade management. Remember when I started out here, I said the single biggest mistake that people make, at least, and it's a big mistake that I made, and our community, hundreds of people in it right now, we're going over it every single day, drilling them in during the coaching calls, is to get away from obsession about chart reading and move towards actually learning how to be a trader. And I want to say this to you. You did not open your trading account to be the world's greatest chart reader. You opened your trading account to make money. And making money means that you understand the skill of trading and how to improve your skills of trading. Okay, so I want to get to that. Now, we're going to walk through the process with an actual example here. Okay, so let's work our way into that. All right, so Trade Manager Pro. Now, what I'm going to show you right now is from start to finish how my community and myself obviously builds a game plan for a new swing trade. Now, again, I want to share as much as I can. I want you to love me. I want you to say, wow, this guy really makes me feel like he knows he can help me, right? So when we do this part of the training, the swing traded training, I want you to, I want you to take screenshots. I want you to ask questions. I want you to feel like it's a process that once you understand it, it will help you have that consistency and the control that you want. Okay, so we're going to walk through it now. We're going to do an actual example. So let me pull up. I said we're going to do NVIDIA. So we're going to actually work our way through NVIDIA. So the very first thing we need to do is we're going to pull up Finviz. I think everybody uses Finviz at some point or another. And we're going to go in and pull up the stock NVIDIA. Now, NVIDIA has actually had a little bit of selling recently, but you can actually see it had a nice big gap to the upside today. Let me actually pull that up so you can see the stock chart a little bit cleaner. And you can see it actually bounced over here. Now, we're not going to get into optimal entry, bullish stacked order flow, and any of those kinds of things. We're going to assume that for this example, there is already bullish stacked order flow. And within this presentation, I'm going to show you how to find that. But right now, right out of the gate, super early, I want you to understand where we're going to end up, how the swing trading process ends up to be repeatable, almost predictable, to the point where you're removing all of the emotional aspect of it because you're scripting out the trade before you put it on. And you're basically giving yourself a note and you say, when these things happen, here's what you're going to do, which is really where most people swing trade and mess things up because emotions start to come in and they start to overthink things. I'm going to show you the exact plan and how it's built out from start to finish. And then I'm going to show you how to find the ideas. Okay. So very first thing we need to do once we go into any stock, we're going to look at some of the criteria down here, specifically average true range, which you can see here for NVIDIA is $5.14 at this particular moment. Okay. Now, the way that we build positions in my community and in my universe, we basically use a term that's known as volatility. And as the stock becomes volatile, which depending on how fast it's moving, each stock has a different average true range, which measures the volatility. We use that stock's individual volatility to decide when and exactly what price we plan to add to a position. And actually on the next slide, after I show you Trade Manager Pro, I'm going to show you how powerful that can be, starting out with small pieces and what that could build up to a point where there was a trade that had over a 20 times risk reward that started out with just a very small position and built up from there. Okay. All right. So let's get into actually using Trade Manager Pro. So I'm also going to walk through the daily ticker because this is a part of the research that I do every day. But Trade Manager Pro is essentially a app that I built, which basically tells us what kind of risk is the right kind of risk, what kind of share size is the right kind of share size, and what do we do with the position after we put that position on. Now, again, the hardest part of trading is separating yourself from the spur of the moment decisions. And I want to show you right now what's possible. And then obviously tonight, I'll show you how to get your hands on this so you can actually use this. Okay. So we're going to use NVIDIA as an example. And we already know that the volatility of NVIDIA, in this case here at this particular moment, is $5.14. Now, generally speaking, the swing trade setups that I use, unless it's a consolidation, generally speaking, I use the previous day's high and the previous day's low. Okay, so I'm just going to get into that. So if we take NVIDIA's price action from today and zoom it out, we'll take a look over here on the top here. The high of today was 179.29. So we're going to pop that in there. 179.29. And the low of the day for NVIDIA today was 175.47. Okay, so you see we have the whole trade mapped out. Everything from what the volatility of the stock is. Again, NVIDIA right now is $5.14. I will bet that if we go to a different stock, any stock really, it's a dramatically different number. So let's actually go to one just to give everybody an idea of why I keep saying that. Let's go to Tesla. Obviously a very popular stock, right? So we'll see what the volatility of the Tesla stock is. And you can see here it's 11.99. So it's more than double the volatility that we're seeing in NVIDIA. Just to give you an idea, it's very, very important to use that stock's individual volatility because that's where the metrics are going to come from to manage the position in the way that I'm about to show you, okay? So if we dive a little bit deeper now into Trade Manager Pro, we have a couple of decisions to make. And something I want you to write down that's very important is the quality of the idea is basically the real risk in the trade. The better job you do of putting good trades together, the better the odds of your edge following through, where the risk is less likely than the reward. So in other words, the reward is likelier to happen. Even in the best of scenarios, sometimes you get both of those hit like I showed you in the portfolio, right? So let's say that we come up with the trade in NVIDIA and we are okay, we like it, maybe we're a little bit late. We would go into the Trade Manager Pro and we would then determine what kind of allocation from our account do we want to allocate to that idea. If I really love the idea and everything is just amazing, like maybe Oracle today, right, with the earnings that came out today, maybe I'd go a little bit higher on the scale that I'd like to allocate to the position. But let's just say we're a little bit late to this one, had a big gap up today, which you can see here on the chart. So maybe I would start this trade with a little bit less capital for those reasons, right? A little beyond what we call the optimal entry. So if we hop on over here, I'm going to keep it at 1% of the account portfolio that we'd be looking to allocate. I'm just using this as an example right now. So let's just say, for argument's sake, there's $30,000 in the account. So we have everything mapped out right now from the volatility of the stock, the entry criteria, the stop loss criteria, and now we do a little bit of magic kind of behind the scenes. Now, I'm sure if you've been in the markets for a long time, it's very popular in the stock market to use the previous day's high and the previous day's low. The problem with that is everybody's using it. So the odds of them getting hit are pretty good. So what we've done is we've based on back testing and thousands of trades. And again, I've been trading for 25 years now. We've come up with a formula that actually gives us a little bit above the previous high, a little bit below the previous high. So it's not exactly at that number, but if it hits that price, there's a pretty good chance that we're going to see some follow through. So I'm going to show you the magic now of having this all scripted out makes the trade plan infinitely easier, because what I'm about to show you is actually the step-by-step for how the trade moves and what you're going to do about it. All right. So it's kind of exciting. I'm really excited to share this with you. So again, we're looking at NVIDIA as an example. We have the previous day's common levels that people put the entry and exit. We have the volatility of the stock, the amount we're looking to risk on this idea based on the quality of the idea, and then the account size as an example for everybody to see. So once I hit calculate the plan, now this is really where the trade scripting comes in. Here's the trade from start to finish. So now I'm going to zoom this in a little bit. If you want, you can take a screenshot of this. I highly recommend that you do. So you can see the entry price and the stop loss here is now a little bit different from the previous day's high and low. So we're kind of calculating that in based on our experience. We don't want it to be exactly at the same number. So we have the entry, the stop loss. We have the difference in points. So again, all calculated out for us. Now, this is what's really important. The share size. If you have never done this before, this is really important. When you trade the proper share size relative to the volatility of the stock and how much you're willing to risk, which was that percentage that was calculated in there, the share size needs to match the amount that you're willing to risk based on the stop loss and the entry. So this 51 shares in NVIDIA on this particular idea is the right amount of shares for the risk and the stop loss that we're looking at on this particular trade. So now we move down a little bit further, and you can see the capital needed for this position to put the trade on, assuming no leverage or anything like that. And then we also have the dollar amount of risk. So really what this is doing is it's giving us the whole trade scenario before we put it on. And then you can see actually on the bottom there, the advanced trade management is really getting to the next part what happens actually when we're actually in the position. What do we actually do at that particular point? But before we put the trade on, we already know that worst case scenario, this 174.44 is where the swing trade will be exited. So we already know that. We're willing to risk that. We're willing to accept that prior to the trade happening. Now, this is the big thing that I really want you to write this down. Again, I'm big on notepads. If you got a post-it pad, write this down. You do not need to take big risk on your initial entry, but you absolutely want to get more if the stock is validating your idea and your edge is following through. So you're essentially getting bigger when it's working, and you have less shares if it does not. It's the world's greatest math formula that we could all learn in like third grade. So let's get into the rest of it here. So we have the dollar amount risk, which is the 1% of that $30,000, and then the initial profit target. Now here, I want to be very clear about this. I have a friend, I don't know if Teddy happens to be watching right now, but Teddy trades a lot of crypto. And when Teddy puts on a trade, as soon as he gets in, he sets a target and he's going to get out right at that spot. Completely guessing. Might be a resistance level. Who the heck knows what it happens to be? Or maybe it's a dollar amount he wants to earn. But why in the world would you put a limitation on an idea that's working? So I want to be clear about this. When we talk about the initial profit target, that is nothing more than the risk and reward to start the trade. It is the minimum we are looking to make on this trade to justify accepting the risk. Okay, so I want to be clear about that. And again, I want to coming back to my goal for tonight. My goal for tonight is for you to realize that swing trading stocks can be the most fun business venture you'll ever have in your life if you do it in a business-like way, which is what we're talking about now. Now, for the fun part, which is actually managing the position, we have the entry, the stop loss, and the share size, right? So now if we dive a little bit deeper, now we're going to go down to advanced trade management. And this is really where things get fun. So now we're looking at what happens if this thing continues to move in our favor, and what do we do with more shares and our previous stop loss, right? So if we reach our edge share price, the first one, which in this case here is 190.60, we now have additional shares we're going to add to that position, which generally speaking, depending on your experience and or your ability to qualify the trade, generally speaking, it's the same amount, never more or less. So in this case here, you can see that it's actually putting on half the amount of shares as it moves in our favor, and we get that next level. So it's giving us the additional capital for the trade, which should be paid for by the profits, by the way, if all things work out properly. Now, this is the most exciting part here, okay? When we get to the point where we are adding to a trade, we now have trade management decisions. So remember what I said before at the very start today, you don't want to be the world's greatest chart reader. You want to be a pretty good chart reader, but this is the stuff that makes the money, which is actually doing the trade management, okay? So what we will do now is at this point, according to the script, the trade script, move the initial 51 shares from the first entry up to the initial entry price, and it gives you the exact entry price. So basically, we're moving that up to break even. So the initial part of the trade, under normal circumstances, break even, absolutely worst case scenario. And when we add at 190.60, we are actually using the previous purchase as the stop loss. So think about what's happening here. The first piece now is break even, worst case scenario. The second piece, if the stock pulls back after we add, will be a small loss because it was less than the original piece. So in this particular scenario, we got 50% more shares, but we did not increase our risk. We actually decreased it because the second piece has less shares. Okay. Now let's move on. What happens if it continues to go? Well, we use the same type of metric, and now we're adding shares again. It's giving us the price, and it's giving us the amount of capital to do that. And the capital, if all things work out properly, could potentially be from the profits of the actual trade that you're in at that moment. And again, moving those shares up, you now move the original piece up to the second entry, which now means there's a locked-in profit on the first one, and you follow the plan all the way up. Move the initial shares, add the first shares up to the previous purchase. So essentially what we're doing here is we are breaking down the trade into a formula, into a step-by-step process where, and I want to be clear about this, this has to be a dramatic thing for you right now, where you will always have the least amount of shares on a position that's not working out, which happens to every trade, and When you get positive feedback, when your edge follows through and that trade starts to move in your favor, those swing trades, even just one or two of them a month, provided you manage the downside and the ones that don't work, will far outweigh what you lost on the trades that don't work out. If all of that is new to you, what I just showed you, please rewind this a couple of times after we're done here tonight, because that structure is what makes swing trading stocks fun. You're literally going into the trade saying, I already know what I'm looking for. It's just a question of how it unfolds, and it's a question of how I'm managing the profits. Now, I want to get back to one other thing that I said over here, which was the initial profit target, right? We said that's the initial profit target that we want to validate if the trade and the risk makes sense to us, right? That's just to put the trade on, but we don't get out there. Once we reach the initial profit target, which generally is 3 or 4 to 1 relative to the initial risk on the swing trade, then we shift over to something called the profit maximizer. And now we try and see how much more we could make on the position just based on the price action itself. So I want to be clear about this. If you are exiting trades, if you put on a swing trade, the stock market moves in your favor and you're getting out for some random reason, you are literally guessing when that thing is going to stop. Don't guess. Let the market and let price action tell you when. And I'm going to show you some examples from the community right now. I want to say hello to a couple of people. Uncle Richard, good Australia. Wow, thanks so much for joining us. That's amazing. Hey, Andrew, how are you? Oh, wow. I love seeing people that have been in the community. It's awesome. And of course, Stephanie. Stephanie, we miss you. Come on back. All right, so that's the first part of what we're going to talk about here tonight. Okay, now I want to walk us through. And by the way, if you have any questions, drop them into the chat or put them in the comments. I'll be more than happy to go over them tonight with you as well. So that's Swing Trade, Trade Manager Pro, crafting a swing trade from start to finish. Do me a favor, type in the chat yes if you think that could help you, where everything is completely scripted out and there's no guesswork. You're basically just following the script. Here's the thing that we talk about in the community all the time. The reason this is so powerful is having a script like that from start to finish is basically like you giving somebody else relationship advice, and you could give them great advice because you don't have the emotional attachment to it. That's the same thing here. You're giving your future self swing trade advice, swing trade plans before you're in the trade, so that when you're in the trade and those emotions start to take over, you're like, no, this is what I said before I put the trade on, and now I just have to flawlessly follow it. So again, if we go back into the portfolio and show you that this is all the same thing. You could see that there's wins in here, there's losses in here, but again, you could see the size of the winners are much bigger than the losses, which basically means that when something gets to a point where it's working out, we have a plan. We want more. When something's not working out, we kick it out, get our capital back, go to the next trade, and we don't lose any sleep. That's the kind of trading business that I want to run, and hopefully I'm going to show you tonight. That's the way it can be when you have all the pieces in place. Okay. All right. So let's continue. And next thing I want to talk about, I want to show you some examples from the community. This is really where it gets super powerful. Okay. Alice actually had a trade. You can see this is in July, and this is really where the powerful part of it comes in. It was an NVIDIA trade from June 3rd, and she added to the trade 3 times. 3 times. Stock eventually had a big gap up. We had a discussion about trade management and whatnot. And you can see here 21.5 R, which basically means on that particular trade from June 3rd in NVIDIA up until that exit on the trade, in this particular trade, 21.5 times her risk because of the trade script that I just showed you. That's how powerful it is to have the script handed to you, where you know everything from start to finish. And by the way, you saw I took all the information from Finviz. It's really the magic behind the Trade Manager Pro that kind of really makes the trading easier. So it's not data that's easy to get to put into there. It's the Trade Manager Pro that walks through. So Alice, amazing. What else do I want to talk about here? John Campbell Smith. There's another one. Again, I want to walk you through the power of doing this. WDC added shares again. You can see this is 9/4/25. A third time, and you can see Guy here added a 4th time, so we can actually kind of take a look here and see what WDC is doing this month. In case somebody happens to be watching this at some point in the future, you can actually see this trade here. Adding to these winning trades is where the hidden money is in your account that you don't even know is just sitting there waiting for you, but it needs to be structured. It needs to be step by step. But prior to that, we need to understand how to put on good ideas and how to think like a trader. And I think probably the biggest thing that people have a hard time with is unrealized profits. And we're going to get into that in just a minute. Okay. So let's finish up here. You can see that the additions on these trades here from John and Guy 4 times on that trade. And then we also have Jane. This is a really exciting one from recently as well. We had a trade in D-Dog, and this actually happened to be just before they got put into the S&P 500. We walked through the trade, and the trade paid for her entire vacation in the Florida Keys. I said her kids were like kind of going crazy when it was happening because that actually happened in the morning. So I want to impress upon you here that if you're finding swing trading stocks to be challenging right now, you probably know enough about chart reading to be successful. What I want to encourage you, and hopefully you're going to want to work with me, is actually learn the difference between chart reading, trading, and trade management. The trade management is what the trading is, but far too many people spend all their time on an indicator hamster wheel, and they never actually get to the point of improving their trading. And that's what we're going to talk about here today. So I actually want to walk you through, let's actually do that. I want to walk you through the actual part of the research that I do, how I outline it for everybody in the community so that you can have an idea of what I do to come up with what you see as the results in the portfolio. So I'm going to walk you through. We start out every day where every morning, you can see this is actually yesterday, I start to produce the research for the community, and I'm giving you some ideas on how to come up with conviction and better ideas and put the pieces of the market together. This is actually one day's newsletter, and I put it out every single day, Monday through Friday, and then we have another meeting on Saturday for swing trading as well. But you can see I'm basically giving everybody all of the top stories that are relevant to the market that would influence our conviction for putting on trades at that particular moment in time. Then we work our way down into market analysis after we've reviewed the news, and I give my take on what's going on in the market. Again, everything that we're doing is setting up the quality of the idea for the type of swing trading risk we're about to take. Remember, the quality of the idea is the true risk in the trade. The only thing after that is whether or not we're at an optimal entry to buy that stock. So I'm walking you through some stuff to think about. So now I'm giving my insights on the bigger picture of the market, getting into significant economic reports, again, influencing our trade expectation and our profit expectation for the week, our type of trading we can expect. Then we move down and we get a little bit more of a foundation under the market itself into sector rotation. And again, I could give you a little bit more of a idea of how we do this. So I break this down behind the scenes. Basically, you can see here, this is starting out in April. Everything picked up a little bit again in May. So I basically follow the market and do what I call is order flow mapping for everybody in the community. And these are where all the ideas come from. And I have my own proprietary way of coming up with percentage gains per sector, per time period, and those kinds of things. Let me actually zoom this in a little bit so you can actually see this a little better on the video. So you can see the date, you can see the sector, and you can see based on my individual basket where we are in that bigger picture. So as we work our way down into order flow and sector rotation, I'm then giving my best ideas that not only have what we call bullish stacked order flow, which means that there's consistent institutional demand over a longer period of time, and as I just showed you, spread out through individual sectors. Then within the sectors, we're looking for how many stocks within those sectors. Again, we're building the argument for accepting risk before we even go over to Trade Manager Pro. So now we're getting into a little bit more of the trade itself, right? Actually doing the research. So once we get into the sectors and we determine where we want to put our focus, we start to work our way down into some ideas that we're looking at as possible trade ideas. And I'm giving some context for why I'm looking at those ideas and actually where I plan to put them into the game plan. So I'm going over different sectors. I'm going over different stocks. I'm going over the amount of stocks within those sectors. And again, here's a very big thing I want to talk about. When you see a hot sector, a hot industry group, is there one stock doing that, or is there 20 stocks? The amount of institutional attention on that sector or that group basically means real money is being spent in a big way. We've seen that a lot in the market with obviously the semiconductor stocks over the last couple of years, where there's been a tremendous amount of attention and money allocated there, and there still is. But as you're looking at sector rotation to find stacked order flow, again, you saw the order flow mapping and how I'm breaking it down in my newsletter every day, which is the Daily Ticker, you're basically building conviction. So raise your hand if you've ever been in a trade where you got it, you nailed it, it moved in your favor. You get one little red candle and it shakes you out of your shoes and you get out of the trade. That happens for two reasons. Number one, you're probably not doing the same amount of research that I'm giving to the community every day. That conviction you're looking for to sit through that pause happens because you have this kind of stuff at your disposal and you're doing the work. If you're not doing it, I'm giving it to you. And the second part is, I mentioned the profit maximizer before. If you are not consciously using and explicitly implementing a way of holding good trades longer while you add to them, you're going to be reacting to every single candle. And again, raise your head if you got out of a good trade too soon and you're kind of like punching yourself in the stomach over it because you're angry because you had the big trade on the hook, but you didn't manage position size properly and you didn't manage the profit properly, which is the profit protocols that I was talking about. So we keep working our way down. Obviously, you can see I'm talking about some trades, exactly where they are. And then we get into a little bit more on the actual industry groups within the sectors. You can see there's more swing trade updates and whatnot down there. I can't give those away right now because that's proprietary for everybody in the community. But I wanted to give you the flow of exactly how I get there. Then, again, I want to teach you how to really think through the ideas. Then every day we have a game plan meeting that starts every day at 8:30 in the morning. So this is where I give feedback on everything that I wrote in the newsletter, why I'm looking at it, how I'm looking at it, what my conviction level is, and all those things. Then it's your chance, the community chance, to ask me questions and post your ideas in order for us to improve your stock picking selection so that you start to gain the confidence to be the reason you make money while you're watching me do it. And, again, you just saw the portfolio before, right? So once we have the game plan meeting in the morning, and I'll show you one from a couple of days, let's say from last week. So basically what happens is every day at 8:30 in the morning, we have a discussion about your stocks, my stocks, everything that's going on in the market. And then after the meeting is done, we provide a summary of everything that we spoke about that day, including the stocks that we looked at, why we looked at them, and the reason that we're looking to trade them. So whether you're too busy or whether you can attend the meeting, I know a lot of people at 8:30, an hour before the market, are commuting to work. By the time 9 o'clock comes around, the replay is available if you couldn't make the call yourself, and all the summaries of why we're looking at everything in the market and the stocks, the sectors, and the industry groups of what we're looking at that particular day and how we're managing open swing trades. So I wanted to give you like the start to finish of what's possible at the highest levels and obviously what's in our community and how we walk everybody through this. My job, my goal, my ambition is for you to be the reason that you make money, but I want to show you the structured path so that it becomes more organized for you in a way where you feel like I'm the reason I'm making money. I want you to say that. I know Andrew has been in there with us. I know Stephanie, if I had many conversations about this kind of stuff. So that's my goal for you. And hopefully I'm walking you through, hopefully I'm giving you some ideas, right? Okay, so now I want to get into a little bit more of the process to get through all this kind of stuff. And if you like what we're doing here today, maybe you're going to want to trade with me. I would love for you to come and trade with me. But you can see if you want to take a snapshot of this, I strongly encourage you to do that. Again, some of the big wins here. Most importantly, though, added 3 times, 21.5 times risk reward. Guy did the same thing, added 4 times on this position. All right. All right. Who am I, right? We did a lot of talking here. This is not about me, but it does kind of help to know who you're talking to or, that kind of stuff. Look, I mean, I'm just somebody who really loves to teach trading. I love to trade myself. I love it today just as much as when I first started trading 25 years ago. If you've never watched any of my videos before, I owned a trading firm in New York City, Keystone Trading Group. We had 300 traders globally at one point. We had offices in New Jersey, Ireland, Canada, California, Boston. We were everywhere. And then I retired and moved down to Florida where it's a lot easier. But I just wanted to give you some context of where all of this stuff is coming from. And right now, Stock Trading Pro, we've been open 7 years now, which sounds crazy. And we have just the most amazing group of people in the community, like some of the people you met here tonight, who I'm very grateful have been a part of our community. Okay, but it's not about me. It's not about me. I just wanted to give you some background. Okay, so the first thing we're going to talk about here tonight, the illusion of chart mastery, why technical analysis feels like real trading, but it's not, the pattern recognition trap that keeps traders stuck, and how chart reading creates false confidence. Just out of curiosity, again, whether you're watching this live or you're going to watch it on replay, do me a favor, type in the chat. Let me know how many indicators you have on your charts right now. On a daily basis, for the most of the charts that you watch, how many indicators do you have on your screen? All right, curious. I have moving averages and volume, and that's it. All right, average true range once in a while for what we just talked about. All right, first thing, why technical analysis feels like a real trading skill. New traders gravitate towards chart patterns because they provide a sense of control and perceived predictability in an uncertain stock market. So what we are really looking for is, because the stock market is unknown about what's going to happen next, when we're new to the markets, the charts and chart patterns are literally the least amount of information we can use to come up with a decision in order to say whether or not we want to buy or sell that stock. So because if we're new, we want to lean towards and work hard on that particular area. But as you're going to find out here tonight, chart patterns are one very small part of successful, profitable, consistently profitable stock trading, because it's really nothing more than how we're finding the ideas, but it's not where the money's made. And I really would love for you to write that down. Chart reading is not trading, but the more we go back and read more charts, the more false confidence we get that one time it worked. We're like, yes, it was the chart pattern that made us the money. It's not. As I proved to you before, it's about risk management. It's about the quality of the idea. And it's about profit protocols and how to manage the winners. Please write that down, because it's the difference for some of you that could make all the difference in the world. All right. All right. The pattern recognition trap that keeps traders stuck. Spending countless hours studying charts creates the illusion of expertise. You're like, I know that pattern. I know that pattern. I know that pattern. While neglecting the mindset and the risk management skills that actually generate the profit. This is one of the biggest paradoxes in trading, where I think everybody can acknowledge that trading is mostly mindset and trade management. But most of us, especially the first few years of our trading, spend all of our time on charts and learning charts better. And if we put in like percentages, we spend 90% of our time on getting better at charts and 10% on the mindset, when it's the other part that actually makes the money. We're focusing here tonight on the swing trading aspect of where we make the money. All right. Okay. So next part, how chart reading creates false confidence. Successfully identifying chart patterns in hindsight makes traders emphasize their ability to predict the future, releasing the responsibility to the patterns. Now, this is such a big thing, because when you get to the point where you understand trading and chart patterns is nothing more than your best educated guess at that moment, and then you have to manage the trade, you will release yourself from saying, I'm making money because it's a bull flag. And if you doubt that for a second, I bet you every person ever watching this video could see the same exact setup, 2 trades in a row. One does exactly what you want. One goes in the complete opposite direction, proving that it's not the chart pattern that will make you money. It is how you handle with the price action in the manner with which we said about adding, getting out, and having a profit maximizer on those swing trades. Okay. All right. So what actually drives swing trading success? Number one, psychology and emotional control as primary factors. I want to give you a little bit of a heads up on something that we talked about. We have coaching calls every Monday night and on Thursday. And somebody asked the other day, how do I get beyond the emotional aspect of trading, where they're entering their fear of missing out, holding, losing trades? And this is somebody who's working really, really hard. And she was very adamant that she wanted to solve it. And I basically said, look, when you write down a big list of what absolutely does not work and does not make you profitable in the stock market, those are the things you have to focus on first to eliminate. And everybody watching this right now, if you've placed at least 10 trades, or if you've been trading for a certain amount of time, you know exactly what doesn't work. When you get to the point where you eliminate those, that's really where a lot of the emotional baggage is, because you're fighting the edge. You're not even implementing the edge. And that's where the psychology and the emotional control becomes much easier, because it doesn't even exist anymore, because you're not seeing trading as you against the market. It's you implementing your plan and allowing the edge to do the heavy lifting. Again, if that's new to you, please rewind this, watch the summary, and take notes, because psychology is kind of a hard word. I like to say mindset. When you understand how you see the market and see the act of trading differently, like we're talking about here tonight, there is no emotional control needed, because it's not even in your belief system at that point. The right belief system is, I'm placing high probability trades and I just have to manage them. And this next trade is an opportunity for me to apply my edge and improve my trading skills. Different than most people who react emotionally on every trade, whether it's up, down, or doesn't move and those kinds of things, and it becomes an emotional mess. And again, that's kind of bringing back in the Trade Manager Pro and scripting it out. Okay. So I want to be clear. You don't need superhuman psychological and emotional control when you see trading as probabilities and following your plan and letting the edge do the work, which means risk management is the process you focus on and try and improve versus your ability to predict exactly when it's going to happen and how far it's going to go. Which, by the way, when you are better at position management, the exact entry does not mean as much as perfect timing. We do talk about the optimal entry. We obviously want to get as much to the optimal entry as possible. But when you are working positions, it takes all that stress off of, I need to be right now. Who wants to trade that way? Nobody. The stock market, it should be your friend, not your enemy. All right. Execution consistency over chart interpretation. So again, I want to keep, this is all about resetting how you see the stock market and what it means to you. All right. You want to get to the point where you're focusing on how flawlessly are you executing what we just showed you in the Trade Manager script versus trying to improve your ability to predict what's going to happen next. And I got a slide coming up where we're going to talk about the difference between predicting and reading what's happening. A lot of people call it tape reading and that kind of stuff. All right. All right. Psychology and emotional control as primary factors. The ability to manage fear, greed, and ego determines whether traders can execute their strategies consistently in an unknown outcome. And again, like I said, at the highest level, once you start to get really good at this and you just see trading differently, all of those things vanish because you are now saying, I'm putting on a trade that matches my edge, and now it's my job to see whether or not I get follow through. If I get follow through, I have a plan to get more. If I don't get follow through, I kick it out, get my capital back, and go to the next trade. Do you think that's a lot less stressful than driving yourself bananas about whether or not you caught the exact spot? Let's be relaxed when we're trading. We have to fall in love with the stock market. That's what it's supposed to be. All right. All right. Now, risk management versus predicting. All right. Successful traders focus on controlling losses and position sizing rather than trying to predict market direction with high accuracy. Raise your hand if you are like, I need to get the exact spot. Just tell me exactly where to get in. It's not important. I mean, it's important to a degree where you want to try and get the best price, and obviously you're not going to chase a stock. And let me just give you an idea what optimal entry is. And I know a couple of people here know what this is, but the optimal entry for the initial position to put that on is if you could imagine a stock, let's say it normally moves and it has a momentum move to the upside. Let's say it normally moves $12. And let's say a stock paused or pulled back and it's just about to start going. So let's say that means that most of that $12 of what it normally does, which is the average true move, is still available. So you're getting it kind of close to what we would call an optimal entry to start that swing trade. But let's take the NVIDIA example from before. If the optimal entry is $12 and the current momentum move has already moved 7, it's still a quality order flow where it's obvious what direction it's going. But in this case, it's already used 7 out of the 12 average true range on this particular stock. Excuse me, average true move. So how do you find that? We basically just go look on the charts and like, okay, the last time it rallied, how much did it rally? And the time before that, how much did it rally? Try and go back 2 or 3 so you can get the average true move and say, okay, this thing normally moves $12. If I buy right now for my initial entry, how much is there? That's what we call the optimal entry. And it's super easy to calculate. It's just looking at the chart and say what it normally does. But this is the thing right here. I have position sizing highlighted. When you understand order flow, optimal entry, and position sizing, all of your desire to perfectly predict what's going to happen next vanishes because it doesn't matter anymore. We already said the smallest loss with the least amount of shares or a bigger position only because it moved in our favor and the market validated it. And if we go even further, again, just to refresh it a little bit, is once we use the trade script, it's literally telling us what the trade management is as it moves in our favor. It's already scripted out before it happens. And again, I want you to write this down. When you know what you're looking for, you're never lost. So if you happen to be confused or overwhelmed or the market, you just don't feel like you don't have enough time, scripting this out what did that take? 5 minutes for us to script out the trade? Now we're talking about what happens before that, which is actually putting the trade together. And again, I hope the beauty of the stock market is coming through in you right now. Maybe you're a little overwhelmed. Maybe it's too much. I showed you before, one winning trades every 18 days we get out of them. That's not exactly super active trading. Even the losses are 6 days. You're not watching the market every day. This isn't day trading. You might be keeping an eye on it because you have a position, but you want to reduce the decision overwhelm and keep your energy up to follow the script, like obviously like we have here. Okay. All right. So continuing along with falling in love with the stock market. All right. Execution consistency over chart interpretation. I want to be clear about this. Most people are starving for consistency. This is something else I want you to write down. Maybe even when you watch this again a little bit later, the consistency that you are striving for in your P&L is the consistency with which you follow the script. So if the script is backing a good edge, and then it's really just a question of you consistently following it to allow the edge to do the heavy lifting. So I want to say this one more time. If you feel like trading is hard work, it's because it's not structured and because you feel like you have to do something as opposed to just reading what's going on, which kind of brings us to something else. I might be getting a slide ahead here, but we often get people ask, well, how do I know if where it's going to be at some point in the future? I don't care. I don't know. Nobody knows. It's our job. We're going to flip that script around. And I do believe I talk about this a little bit later, but it's our job to say, here's what's happening now. And I have protocols in place to tell me if it's still valid or if it changed. So that means we're simply going to drive in that direction until something changes. Very, very different from saying, I think something's going to happen down the road. And then I'm going to be careful in case something happens down the road. Who does that? Most people who are trading who don't make the kind of profits like I just showed you before because they're guessing where it's going to end. We don't want to guess. If the market is going to offer us some money, let's let it give us some money, but you need to have the protocols in place in order to hold those winning trades. Again, I'm telling you, right, I don't know. I know some people here, I guarantee you have had trades that were monster winning trades that you got out of too soon. It's because you guessed where it was going to end. And tonight, hopefully, we're changing your thought process on how to do that. Carlos, I have to say hello. How's it going, pal? Man, it's awesome to see you here tonight. Hope you're having an amazing, amazing day. Thank you for joining us. I really appreciate it. All right, so let's continue. All right. So again, making the same decisions repeatedly is what the game is all about. All right. So think differently. This is really an important part here. Oh, this is the slide I said. Okay. How do I know if this is still valid is the way I think versus how do I know where it is going? Let's just be super clear. Nobody knows where it's going. Nobody. But once you have a structure in place, it's very easy for you to say it's still or it's not. It's still going and still validating my original idea for putting it on versus the situation changed. Only now do I have to do something. That's dramatically different. It takes all the pressure off of trying to be perfect and see the future. When you have the protocols in place that I just showed you before, it's infinitely easier to be on the right side of a trade and manage that trade with less stress. Okay. So again, if you happen to not see it, if maybe you just came in right now, go back and watch that part about the position manager and you'll see exactly how it's laid out for you. Okay. And again, anybody has any questions, ask the questions or leave a comment below the video. All right. All right. So redirecting your swing trading focus. Identify which skills actually generate profits. What part of what you do, again, everybody has a legal pad. Get out your legal pad, start writing the stuff down. Eliminate common mistakes that waste time and money, and start building a scheduled routine to focus on your trading skills. By the way, when you start to ruthlessly ask yourself, did I follow the plan? Did I follow the script? And you come back with a yes or no, you will every day start saying, well, I had it. Why did I get out? You'll start to see that you move beyond the emotional reactions and the spur of the moment decisions because you have a choice now. I can keep going down this path where every time one little blip on the chart gets me out of a good trade versus if I stayed with the trade and just followed the plan, I would have made 4 times the amount of money. You start to get to the point where you're angry with yourself, like you tell this guy to take a hike and now you're just following the plan. I want to be clear. I am making this sound like it's, like ABC, and just, you still have to learn how to do this in real time. And we're going to talk about paper trading versus real trading and those kinds of things. But at least you're heading in the right direction if you're open to everything that I'm talking to you about here tonight. And then obviously the best thing is just follow me, right? Like I just showed you what I'm doing for everybody in the community. The best case scenario, just following me along and asking questions on all the calls that we were just talking about before. Okay. All right. Next, identify which skills actually generate profits. Now, understanding the difference between the activities that feel productive, like studying charts, and those that actually improve your swing trading performance, like trade reviews. You should be ruthless with reviewing your trades and asking yourself, was that a good decision? And one quick thing here as well. You need to ask yourself after you got out of the trade, whether you made money or not on that swing trade, no matter what the stock market did that day. But you get out of the trade and you say to yourself, would I take that trade again? If the answer comes back yes, whether you made money or not, you're finally starting to allow the strategy and the order flow to do the heavy lifting. It's up to you now to just manage the position properly. Okay. I love sharing this, and I'm super happy that people here that have been in the community already. All right. So common learning mistakes that waste time and money. Many traders spend years perfecting technical analysis when they should be developing an edge, risk management, and profit protocols. Again, let's raise our hand. How many people have profit protocols? Everybody knows the stop loss, but how deep are your plans for what you plan to do when the thing actually moves in your favor? That's where the money is made. Trading is managing the downside so you're around long enough to understand how to make the upside. That's our goal together. All right. When I had my firm, I drilled this into everybody every single day. All right. Implementation consistency over more indicators. Creating daily habits that reinforce proper risk management, position sizing, and trend management rather than pattern recognition. Now, why did I just stress trend management? I'm going to give you the biggest insight that you could take out of everything we're talking about tonight, hopefully besides the Trade Manager Pro, because that thing is pretty cool, right? The profitable side of trend management is the part that most people need to work on. Everybody understands if it goes down, I'm getting stopped out, and you get out, right? Supposedly you get out exactly where you're supposed to. The trend recognition and the trend management while you're in the position is the active part of the trade. That is the active part of making money, which goes back to what I said a couple of slides ago. Is this still valid? How do I know? Versus where do I think it's going? Where do I think it's going is an unknown. Is it still valid? Is a definite no, meaning you know what is happening. It's a definite known, I should say. Okay. So it's very important. I hope you're taking snapshots because I really want you to take this with you. All right. All right. So now moving into stock selection, screening, and filtering. So now we're actually getting into the quality of the idea all the way before we start to look into some of the other ideas, right? Before we even get into Trade Manager Pro. So we have screening and filtering. Then we have fundamental versus technical selection criteria. And we also have portfolio construction, trade quality, and position sizing. So again, hopefully I'm opening your eyes to like, wow, if I do this properly, give myself a chance to learn how to put these pieces together. Gosh, just think about where you'll be 12 months from now. You'll have this beautiful business that you run, you control, and you know it from start to finish. That's hopefully what you're going to take out of everything we're doing here together. Okay. All right. So creating effective stock scanners and watch lists. As I showed you before, I keep it really simple. I have some custom stuff that I do, and I'll talk to you about those a little bit later. Most of the scans that I'm doing end up being in Finviz or TradingView, one of those two softwares. So you can actually see here the S&P 500, or I have some custom scans in TradingView, and I think probably the biggest one here. We have order flow scans, and then we have scans that are relative to minimum viable criteria and optimal entry. Again, this is a really important thing, too, that you're going to learn from me. Once you understand what you're looking for, the next step to systematize all of the stuff we're talking about right now is to make sure that your charts are set up to tell you exactly when the conditions are there, that great ideas are also at an optimal entry. Once you have your software set up, then you're really just sitting back and you're like, okay, I'm going to look for some ideas and take a sip of water. And you're like, okay, until I see what I want based on having my software set up properly, based on my edge, there's nothing for me to do, which also, by the way, eliminates the fear of missing out. because if it's not popping up on your software, there's no reason for you to accept risk, because there's no reason to put it in the Trade Manager Pro, because the edge isn't there. So you're starting to see now how like all the stress you might be feeling in trading and all the overwhelm might be because you're doing a little bit too much on the charting side and not enough on how do I actually make money. That's what we want to come out of tonight with. Okay. That's really a big part of what we want to talk about here tonight. Okay. All right. So when you're scanning, whether Finviz, TradingView, TradeStation, Thinkorswim, whatever it happens to be, it's very important that you have minimum criteria. You actually saw that on the chart that I just pulled up there. I don't know if you can see it, but I have MVC. MVC basically means minimum viable criteria for me to be putting on a trade. And again, when I'm giving everybody the stuff in the daily ticker, you can actually see that I am giving from start to finish stocks that meet the minimum viable criteria and are sitting at an optimal entry. So I'm literally doing this for everybody every day. And obviously then you can see the results in the portfolio as we're building this out. Okay. So again, I want to be completely transparent. I want to help you as much as possible. And if by the end of the night you want to work together, I'd love to see you in the community. All right. All right. So we want to have minimum viable criteria that kind of brings it all the way down to, I only want to look at stocks that match my edge. Those are the only ones that are worthy of my attention and worthy of my capital before I put them into Trade Manager Pro. Okay. All right. These are minimum criteria, not even including order flow stacking or any of the order flow mapping I just showed you before. We need volume, volatility, and liquidity. And the reason we need these three things is because we need opportunity, we need the ability to manage the downside, and we need the ability to add to positions that can handle it when it moves in our favor. Now, the one thing I do want to say here, which is a question I get asked often. Well, why do I need to worry about all those things? Because I'm not trading big, right? I understand that, but do you plan to always trade small? Your goal should not be like, I'm going to stay small all the time and my trading account's going to stay small. You have to think like you want to become. When I played baseball, you can see all the hats back here. When I played baseball, I was practiced like I played. And basically the bottom line is, if you're not worried about these things, it's because you're thinking small. And I'm not saying to be aggressive. What I'm saying is you have to start to see yourself, when you start to get good, your account's going to grow and you're going to need that liquidity to get in and out at a good spot where you want to. Okay. So in the minimum viable criteria, there's selected stocks that have sufficient daily volume. Generally speaking, swing trades, I'm looking for 1 million shares per day. Day trades, I'm looking for 2 million shares per day because I could trade much more aggressively with size on day trades. But today we're talking about swing trades, and the stock selection for that is at least 1 million. And average true range for the volatility is at least 1. So if we kind of work our way over into Finviz, I can just kind of give you a really quick filter here on the scan. So you're going to click over here on all. Let me actually get off the screen here so you can actually see the full screen. And when we're building these out, we're going to click on all. I'm only going to be looking at stocks, so stocks only. I'm going to look at stocks that are at least $10. Again, I'm just giving you some ideas for minimum criteria. Average true range, I'm looking for it to be at least over 1. So that means it has some volatility to it. It means it has enough for me to make some money if it moves. And the average volume for a swing trade is over 1 million. So you can see we brought 10,000 stocks down to 769. Now, we didn't do anything with order flow or any of those kinds. We haven't qualified anything at this point. We just knocked off 9,000 stocks before we even started to look for ideas. And again, when we get into what I showed you before in the newsletter, I'm walking everybody through how to find these ideas based on sector rotation, order flow mapping, optimal entries, so that when you go over to the Trade Manager Pro, you're only putting the best of the best ideas in there and creating that plan for yourself. Okay. All right. Sector rotation and market condition filters. All right. So now what happened? The market changed, right? Think about what's going on in the NASDAQ right now. It feels like we're going up every day, right? But we've really been kind of in a trading range for the better part of the last 6 to 8 weeks. Look at that. It might feel like we're definitely at all-time highs, but have the conditions changed where we're kind of stuck in a box here? So we have different profit expectations based on what's going on in the market, the sector, the industry group, and how close we get to the optimal entry. So there's 4 pieces to determine the quality of the idea, again, before we put it into Trade Manager Pro. I want to say hello. Hey, Billy Box. How's it going? Thanks for joining us here today. Appreciate that. So again, you want to write those down. And behind the scenes in the community, we call that the power pyramid. where we have the foundation of the market. Then above that, we have sectors. Above that, we have industry groups. And above that is the stock that we're looking for. And the more pieces of that put together, the greater conviction we have. And then the last piece is the optimal entry for the idea, which we kind of reverse engineer, like I showed you before, from the average true move. I promise we're going to get into a lot of stuff here tonight, so you might want to watch this more than once, right? All right, so next. Adjusting stock selection criteria based on current market order flow. Which sectors are receiving institutional capital flows? So here's the phrase that I want you to have, and this is really an important one. When institutions have their attention on a particular sector or industry group, that's where I want my attention, because if their attention is there and they're using their money on those ideas, why wouldn't I want my attention to be there? So to give you a little bit of a context, we talked about this before. So we're basically looking at order flow over a certain amount of days. We're basically mapping out over different periods how the order flow is looking and where we should be giving our attention. And then we get to the point where we are now saying, well, how many stocks meet that criteria? And you can actually see over here where I'm very specific with how many stocks are in the sector or industry group. Like you can see here, boasts a healthy 25 stocks. So the technology sector heading into this particular day, which I think was yesterday or this morning, we actually went out of our way to mention how many stocks met the criteria, which is literally explicitly saying, put your attention here. And guess what? All these tech stocks exploded, which kind of happened coming off the heels of Oracle. But when you follow the order flow and shadow the order flow, swing trading stocks is infinitely easier to feel less stressed out, because you're no longer predicting, you're just shadowing the money that's actually moving the market in the first place. Okay? All right. Hopefully I'm giving you some new ideas here today. All right. So fundamental versus technical selection criteria, earnings quality. So we got revenue, growth metrics, and guidance. Those are really the big three that we pay attention to. What was the revenue expected to be? What was the earnings per share expected to be? And did the company give guidance? And if they gave guidance, how long was the guidance? Did they give guidance for the next 90 days, next quarter, or did they give guidance for the next year? That matters, because if the company's saying, we think we're going to do good the next couple of months, that's one thing. But if the company says, yeah, we're really forecasting the next 12 months to be amazing, that's something you want to pay attention to when we start to get into the fundamental stuff and you start to hear earnings reports. And then in back of that, you have the technical setups that are the foundation of why those charts are happening in the first place. You have technical setups, momentum, and price action, which is the way that we look to get into the trades, kind of everything we've been talking about so far. So when we combine fundamental strength with technical timing, we start to increase our conviction even more. So again, I want to keep coming back to that. If you're finding trading to be stressful, if like every single swing trade you put on, you're stressed out of your mind, you can't take your eye off, you got to have your phone with you every 3 seconds. It just means that you need maybe to consider a different way to set up the quality of the ideas. And hopefully tonight, I'm kind of really giving you through a way of doing that. Okay. All right. All right, so earnings quality, we're looking at growth metrics and guidance. So what we look for every time earnings comes out and we're looking for a catalyst, we're evaluating the expectations of what was expected versus the actual announced report. We're looking for revenue growth, profit margins, debt levels, other financial metrics that indicate long-term business strength. Again, that word expectations for earnings is really, really important. And you saw that with Oracle today. If you happen to be watching this video at some point in the future, I'll give you an idea. Oracle just reported last night, and the stock was up all the way up here. It was up 36% today because the expectations were wildly exceeded from the report. Okay, so let's keep it simple. Those are the three things that we focus on in order to get a handle on the earnings reports. Okay, so technical setups, momentum, and price action. All right, identifying stocks with favorable order flow, relative strength, price momentum that suggest an optimal entry. So I actually just walked you through how to find an optimal entry a couple of minutes ago by reverse engineering the average true move to determine how much is left on the initial entry. Okay. All right. Combining fundamental strength with technical timing, using fundamental analysis to identify quality catalysts, like I just walked you through, and technical analysis, which is optimal entry, order flow stacking, and the other things, to determine optimal entry and set your expected initial profit target. So again, I just want to repeat that. Our initial profit target is not the place we're getting out. It's nothing more than us going into a trade saying, based on what the stock normally does this trade warrant accepting risk? Now think about it. When's the last time you thought about that? Not, I just want to buy, but does the initial part of this trade warrant the risk? And I'll give you an example. We had a trade today that somebody called out that we discussed in the morning game plan meeting. Basically, the trade was where the stock did an average true move of 12, happened to be the same number I gave before, but the risk on the trade was 7. So it really didn't kind of make sense for the initial part of the trade. And we kind of walked our way through that. When we analyzed the trade from start to finish, and again, this is the value of those pre-market meetings. We can go back and forth in real time and have this discussion before the market opens. We determined that the idea was valid, but the risk on the trade, even though it was still a good idea, did not warrant a higher allocation of capital. So if you go back to the Trade Manager Pro that I was talking about, we went up a level and risked less on that drop down. So I'll show you exactly what I mean by that. We'll pull that up really quickly. So we go in and we put in the risk amount. We actually went down to 0.5%, which was lower risk because that's what the quality of the idea was calling for. So think about that. Good idea, very strong, but the risk for the trade setup was a little bit higher than what the stock normally does. It happened to have a little bit of news yesterday. So we're kind of separating whether it was a good idea from how much you want to start the trade with. Think about that. Think about how deeply we're thinking about putting our money in harm's way and how we want to do that. It's different from whether it's a good idea. This stock trade was actually a good idea, but the risk didn't make sense for what the stock normally does based on the volatility, right? So it's kind of cool. We're going to give you a summary of all this kind of stuff, so don't worry about that also. We'll make sure you get everything for that, okay? All right, so I want to continue because I'm really enjoying this. Hopefully you are as well. Portfolio construction and position sizing. So now we're getting a little bit more big picture and how we're actually allocating money. Diversification strategies and correlation management. That's a lot, right? But it really comes down to how much do I like the market at that moment based on what's going on in the market and the sectors. So if I can take you over to the daily the daily ticker again, my daily research, this is basically what we're looking at. So if we start out with the market here and we have an assessment of what the market's doing, the next thing we want to do is how are we allocating our capital at this particular moment relative to which sectors and relative to which industry groups are in sync with the market. So which stocks, which industry groups, and which sectors are in sync with the market is basically what this is saying here. We're not necessarily building a portfolio of a whole bunch of stocks. We're not diversifying for the sake of diversifying. We're allocating our money in a spot where there's the most institutional attention at that moment that we have money to allocate. And then based on the quality of the idea, position sizing, as I just discussed, is really what comes into play. So we're basically managing sector exposure and concentration risk, meaning we don't have too much in the same place based on going through the process that I'm actually kind of showing you right now. And I think it's kind of cool that you can actually see one of the daily tickers and how I do this for the community every day. Okay. All right. All right. Diversification strategies and correlation management. That's a mouthful, right? But really what it means is we're spreading risk across different sectors, different stocks, different market capitalization. By the way, a little bit of an insight right now. The Fed is about to cut interest rates. It's just a question of how much. You want to make sure that you start to pay attention to stocks in the Russell 2000 or even the Russell 2000 itself, the IWM. These small cap stocks are going to be greatly affected by interest rates coming down because these smaller companies need to borrow money, and the cheaper the money, the likelihood of them getting better payments, lower payments as interest rates come down are pretty good. So you're going to start to see these small cap Russell 2000 stocks perking up. So add them into your rotation to start paying attention to them. And again, just as a little bit of a heads up, you can go into Finviz and go into the maps. And on the side over here, you can see that there's a couple of different ones. If you click on, I normally just watch the S&P 500, but if you click on the Russell 2000, you could start to see, let's say over the last month, you could start to see where pockets of opportunity are. You can see regional banks at this particular moment are starting to perk up. Look again, how many stocks are getting institutional attention. So now kind of qualifying how we're finding the ideas in the first place, right? Okay. All right. Now I just want to talk about this because this is something that happens sometimes where people get a little bit overwhelmed with the phrase portfolio, right? Portfolio performance. I want to be clear. We're not talking about you're going to go out tomorrow and like buy 12 different stocks and build a portfolio. It's not what we're talking about. Okay. What we are talking about is building quality ideas based on the market and the sector strength at that particular moment. So you might end up having, as an example, you might end up having 10 swing trades over a 90-day period, but really the portfolio is how you allocated that money at that moment in time based on order flow mapping and all the stuff that we're showing you here today. Okay, so I want to be clear about that. I want to keep your stress level down. This is not about building out a massive portfolio. It's about capital allocation and the proper allocation at that moment that you're looking to do something, which is again what I walk everybody through in the daily ticker every day here. Again, just to give you an idea of like what goes on in this here every day, you can actually see how deep the research is every single day. So the very top of the daily ticker, I'm literally telling you where to focus. I'm saying here's where the money's flowing. Here's where the institutional attention is based on my proprietary data and all those kinds of things. And you can actually see how I break this down for everybody and what to focus on. Okay. I hope I'm really waking you up to like, wow, it's structured. That's like the part that everybody wants, right? That's where the consistency comes from. All right. Okay. Position sizing based on conviction and risk tolerance. Allocating capital proportionally based on confidence level in each trade while maintaining consistent initial risk position. Now, the reason I have initial risk per position highlighted here is I just want to keep coming back to this. When you understand order flow stacking, when you understand putting the pieces together like I'm showing you here tonight, and again, like I do for the community every day, your job is to make sure that you are putting on the right initial allocation based on the quality of the idea at that moment. But the plan is, if it works out, we have a plan to get more because we're getting positive feedback. The plan is if we put it on and it's not working out, we kick the trade out, we get our capital back, we take a small loss, and we go to the next trade, which is what I showed you in the portfolio at the very beginning of today's presentation. Okay. So initial risk is what matters because that's what's going to keep you in the trade with the plan to add more as it's moving in your favor. Okay. All right. Managing sector exposure and concentration risk. Avoiding overweighting in any single industry or theme. So what are the big themes in the market right now, right? We could probably rattle these off together very quickly. The dominant theme in the market right now is artificial intelligence and all the stocks and the capital expenditures that are going into that, right? It was NVIDIA, it was AMD. Those stocks have pulled back a little bit recently. Money has kind of now shifted over into a little bit of a different theme where hardware stocks and software stocks are starting to get a little bit more of the attention. So that theme shifted a little bit. Again, we talk about all these things in our meetings every morning and in the newsletter. Another theme that's in play right now is interest rates. The market right now is really loving the prospect of interest rates coming down next week as of filming this right now. And the only question is whether or not it's going to be 25 basis points or 50. So you're starting to see now how like we're putting this mosaic together as a community. And we're like, well, what does all this mean? And what does this mean for my initial position size? Start to think about where you're reading the headlines a little bit differently. What's the dominant theme and what does that mean for conviction? That's where swing trading becomes this beautiful puzzle that we put together as a community. And then that kind of shifts over into how do I want to risk my money? How do I want to allocate money to the market at this particular moment? All right. All right. So now trade scripting. We kind of went over this already, taking the emotions out of trading so you can generate predictable outcomes. Now, I didn't say that lightly. I want to be super clear about this. Predictable outcomes in the market come from having an edge and flawlessly following it. Of course, sometimes stocks gap or unknown unknowns happen. Of course that happens. But you can't be afraid to trade based on something that might or might not happen. There's always going to be risk. That's why we're speculators. Our job is to minimize our risk. And the biggest way that we minimize our downside, number one, is flawlessly executing losses where we're supposed to. They happen. I have them. You saw them in the portfolio. I'm not shy about it because I live in the real world. I'm not going to say I never have a loss. That's ridiculous. The second part of managing the downside is not adding aggressively. And again, aggressively, I'll say in air quotes, not adding a bigger position until the trade starts to validate itself. So as it validates itself, we're putting more into the pot because what we expected to happen is happening. So that's kind of like a backwards way of saying we're minimizing our position size and our downside because we're not going to have bigger positions unless the trade starts to work itself out. Okay, so we're going to continue with that. Let's see. All right. Hey, how's it going, Simon? You've helped me a lot, and thank you. Been swing trading CRDO and CLS and holding, made $7,000 so far. Holy mackerel. I wish I could give you a hug. That's amazing. Simon was a part of our community for a long time. Simon, that's absolutely amazing. Wow, I just got goosebumps. I love to see that. Thank you for letting everybody know about that tonight. And thank you for letting me know. I'm very excited for you. I know you worked hard, and I'm very proud of you. Okay, so let's continue here. Again, trade scripting, everything we've talked about here so far. Automated entry and exit logic. So again, we'll go all the way back to what we started out here tonight. I promised you we were going to start at the beginning. And this is the trade script that we talked about before with the Trade Manager Pro. And you can see it's all automated to the point where it tells you exactly the next step to make. Just a question of following the plan and following as it moves in our favor. We did get a couple of questions about, well, what if it moves against us? Well, that's the very beginning part of it. We have the initial entry and the stop loss. If it moves against us, we get out. It's that simple. If you hold losing trades, it means that you have an ego the size of Texas and you're trying to prove yourself right. Don't try and prove yourself right. Try and prove that you really want to be a trader, and traders make flawless decisions. And that's where trading becomes fun. And I don't know the last time you said trading was fun. I love it. I can't wait every day to get involved. I just want to do my research. That's how life is for me. And I hope that it's coming through that could possibly happen for you as well. Okay. Okay. So let's continue with scripting to really drive this point home. Risk management automation. So automation on entry and exit logic. And when I say automation, it's knowing exactly what you plan to do and then programming that into your trading platform. Risk management automation, there's no such thing as a mental stop. Put it in the system, right? Back testing, strategy validation, and then automated entry exit. I want to talk about, we're going to come up to it in a second, but I just want to say this while we're going here. I am not a big believer in paper trading. I just want to say this just to be super transparent. I think paper trading is good when you're learning a new software, and back testing is valid as well. But they have nothing to do with actually having real money on the line. So I'm a big advocate of, even if you're trading 5 shares, you're still trading, and there's an emotional aspect to it, and there's a feeling to it that you have money on in the markets. So just keep that in mind. It's not the same. It's not the same back testing results. You can get some good feedback from back testing and absolutely do it if you have the software capability to do it. But there's nothing like actually putting on a trade and actually walking through the process of managing a trade. So I feel very strongly about that. I just wanted to get that out there. Hey, Chris, how's it going? Oh, wow. How are you? Gosh, we haven't spoken so long. Wow. I hope you're doing amazing. Honestly, it's so nice to see people come in here tonight that I haven't spoken to in a while. It's actually really awesome. Okay, so automation entry and exit logic, right? So now we're getting more into the pre-planned implementation of putting the trades, converting manual trading rules into actionable steps, translating subjective trading decisions. Again, that one candle that got you out of the trade, that's subjective. You don't want that. You want it to be objective. The script says, here's where the stop loss goes. The script says, here's what we plan to add. The scans say, here's why we're looking at it in the first place. All right. No human emotion, no hesitating. By the way, most people hesitate because they're not confident they're going to do what they're supposed to. Or they're not confident in their edge, which means you didn't trade it enough to have that confidence. All right. All right. Order types and execution automation. You'd be shocked at how many people don't know the proper order types. It's one of the first things that we talk about in the community. Mark the difference between a market order, a limit order, a stop market order, and a stop limit order, and the different types of conditional orders that go along with that. You need to know that because you're going to have multiple orders out there, one protecting the downside and one adding to a trade as it's moving in your favor. And then hopefully get to a point where you have the profit maximizer where that trailing stop loss is going to be in there to secure winning profits if price action does something specific. Okay. Handling market gaps and unexpected price moves happens all the time, right? Can't do anything about it. You can prepare for it, but unknown. They can't do anything about them. Programming safeguards to manage situation where stocks open significantly higher or significantly lower than expected, disrupting normal entry and exit logic. Again, hopefully you're seeing that we live in the real world here. We're not just going to show you the beautiful chart where it works out every single time. Sometimes it does, sometimes it doesn't. We always want to do our best to be prepared. Of course, sometimes something's going to happen, but you also want to prepare for that as well, right? Let's see. Hey, Chris, on the step of getting consistent and making a little, should be making a lot next year. I love to hear that. That's amazing. I hope you blow past your wildest expectations. I really do. Okay. All right, so risk management, automation. Now, when I say automation, I mean you don't have a mental stop. You actually have it out in the market, right? So basically, we're looking at stop loss and take profit automation. So the stop loss is for the initial part of the trade, the trailing profits and trailing stop loss is when the trade moves in your favor. So if you hear that language, stop loss means it's not profitable yet. Trailing stop loss means it's profitable and you're locking in gains at a certain level or a certain amount of a pullback. All right. Position sizing calculations and maximum risk limits. By the way, if you are not trading well, and I just give you like clear, straight up truth here, the last 10 days of August, as of recording this right now, August of 2025, the last 10 days, the stock market was very hard. We weren't getting good, clean follow through. And you have a move in your favor, a pullback, a move in your favor, and a pullback. And you can actually probably see that on the portfolio over here. Again, I like to be totally transparent. You can see there over here at the end of August, there was a couple of losses in there, but look how small they were. Tiny, tiny losses relative to what we're doing on the winners. So it's very, very, oh, I'm sorry, let me make that a little bigger. The end of the month was a little bit tough. We weren't getting the same follow through, but it didn't really affect the overall portfolio performance because we flawlessly took the loss. But here's the thing. When the market conditions get tougher and you're not getting that clean follow through like we had in May, June, and July, we still took the trade, but we lowered our position size. So lowering our position size without the same follow through, we could still take a loss, but it doesn't hurt because we recognized it and we stepped on the gas instead of hitting the gas because it was no longer May, June, or July. Remember that. If you put on a trade and it flies and it's great, it's easy, you got good market conditions. You put on a trade, it goes and pulls back. It goes and pulls back. Something changed, and so should allocation of risk. These are the kind of things that we talk about every day in the community. All right, it's really important. All right. So limits, portfolio heat, and correlation based on risk control. So obviously we're talking about the quality of the idea and what does that mean? The follow through, what does that mean for how much you're going to allocate to the trade? Stop loss and take profit automation. Predetermined exit points that automatically close positions to limit losses, obviously the stop loss we planned before the trade, or secure profits without requiring manual intervention. I want to be clear about this. If you are swing trading stocks, you should not be watching a 5-minute chart. You should be not manually trading anything based on what happens intraday. You should have your plan and you let the plan play itself out. Small fortunes were given away because you were watching a 5-minute chart, but you planned on holding the trade for the next month. Okay? Plan that in. Hold yourself back from over managing a position and just follow the script. That's why we have the Trade Manager Pro in the community, because we want you to just plan the trade and execute the trade. Don't overthink it. All right. All right. Position sizing calculations and maximum risk programming, as I showed you in the Trade Manager Pro, calculates appropriate position size based on your account size, the volatility, the maximum acceptable loss for you at that particular moment, and based on the quality of the idea per trade. It changes every single trade. Different volatility, different news, different catalysts, different market conditions. You should not be trading the same way every single trade. There's different circumstances that call for different trade management. Okay. Same thing with driving. You don't drive 75 every day just because you want to. All right. Portfolio heat and correlation-based risk controls. We kind of hinted at this. You want to make sure that you're rotating your capital as sector rotation happens in the direction of the market. It's by far the easiest way to be in the right stocks when you implement the system or protocol that monitors not only your portfolio risk, again, portfolio meaning the bunch of decisions you made correlated to what's going on in the market. All right. All right. So back testing and validating the strategy. Again, back testing and trading will increase your conviction in your edge. There's no other way to put it. When you validate your edge with real trading, that's where conviction to take every trade comes from, because you're not hesitating. You're not doubting it anymore. You saw it happen again and again and again. The only thing left is for you to follow it, be disciplined on your losses, be disciplined on adding to positions. All right. And there's multiple ways of doing it. Back testing. Again, as I just said before, I much prefer much smaller position size while you're learning. Get real metrics for performance and your performance, not only the strategy performance, but your performance as well. So again, you could use historical data, but the best way, if you're going to do it, you could back test with historical data. The problem with that sometimes is you can start to over optimize based on market conditions, and you tweak it here and you tweak it there. It's better to do it with real trading because then you're actually getting into real market conditions. Okay. All right. Performance metrics that actually predict future success. Focusing on risk-adjusted returns. What are the maximum drawdowns per position, per day, per week, per month? Right? Obviously, we need to manage our downside. What's the maximum allowable, and what does your system allow? You saw how we do it in Trade Manager Pro, where we actually have a certain amount based on how much we're willing to risk on that particular trade. And then that tells us what's the right share size based on the risk. It's all calculated, super easy. All right. All right. So now we get into the actual part of making money, right? This has all been the mindset stuff and how to put all these things together. The actual part of trading, protecting capital while actively learning how to make money. Please take a screenshot of that. This is probably one of the most important things that I can offer to you this evening. Is our entire job is protecting our capital while we learn to trade better. The same exact chart you're looking at now, the same exact type of trade you're placing right now will be a completely different experience for you a month from now, 2 months from now, 3 months from now, when you put the focus in the right place, which is believing that when you have an edge, the hard work is done by the edge. Then it's your time to manage the downside and manage the upside. Critical to understand that. Please take a snapshot of that. All right. So trade management is position monitoring and adjusting. We've already talked about that, right? Adding to positions, managing the upside, profit taking and loss cutting strategies. This is all where the money's made and protected. Please take snapshots here. Portfolio level risk control. Out of all the trades you have open right now, is there any place where we can get more or scale back, or maybe just cut some of the position size down or get out? So again, position monitoring and adjusting. When you know what you're looking for, you're never lost. Now, the reason I keep saying this is that when you know what you're looking for from an order flow stacking perspective, when you use the power pyramid and we're looking at the market and we're looking at the stories, the themes that I said before, you already know what's happening. Now it's not your job to predict what's going to happen next. You already know what you're looking for. Now our job is to say, has what is unfolding changed, or is it still valid? If it's changed, I now have a new set of protocols, which I already showed you in the Trade Manager Pro. Or if it's still valid, there's nothing to do and make money. Because if it's still validating your idea, you know what you're looking for and it's still there. Infinitely easier than trying to predict where it's going. We flipped it on its head, and it makes trade management infinitely more in your control, because when you know what you're looking for, it's either there or it's not. And that makes it a lot easier to say, oh, there it is. Now I have to do something, versus no, it's still valid. Just leave it alone. Obviously, it's 7:30 at night. We're not in the market right now, and that's a little bit easier to say that. But when you get to that point, I promise you, trading becomes much more formulaic and easier to do. All right. So when and how to scale into positions must be mapped out. Adding to winning positions is the secret swing trading activity hiding right in front of everybody. If you read, again, we have the books back here, right? You can see Reminiscence of a Stock Operator up there right next to Sam Walton. He literally said this 100 years ago. I believe that book was 1927, about how he puts on his probes in the market and he builds the position as it starts to work out. Everybody overlooks that. Everybody goes to the part, line of least resistance and all these other things. Building positions is where all of that extra money is. You need a protocol for profits. It's the single biggest swing trading secret in the stock market that's hiding right in front of you. It's working. Get more. And if you get more, have a protocol in place to adjust your trade management to lock in profits and protect the downside. All right. All right. Managing winning trades versus losing trades, applying different management techniques depending on whether a position is profitable or underwater to manage gains and minimize losses. So if it's not working, kick it out, get your capital back, go to the other one. It's working out. Great. We already have it planned and what we're going to do with it if it moves in our favor. Now, trailing stop losses and dynamic exit strategies. I never get out just because a stock hit a price. I want to see how far it's going to go, and I'm going to let the price action tell me. Again, I just want you to have something to take out of this here tonight in a really big way. Don't guess. Don't guess where it's going to stop going up. Let the price action tell you. Stop limiting the amount of money that you could make because you're afraid of giving back unrealized profits, protecting your ego, and you're fearful of those things. Don't guess. The next time you're in a position, ask yourself, if it's working out, am I thinking about getting out, scaling out, or getting more? If you're not going to add when it's doing exactly what you wanted it to do, when would you? It's uncomfortable, but once you get to the other side, I promise you, it's a completely different way of looking at the market, and those hidden profits, that's where they're sitting, provided that you're putting on good ideas in the first place. All right. And in our community, we have something called a profit maximizer, which is a big part of holding those trades. So when you saw those positions before that some of those people in the community made those big gains on, they not only added to positions, but then they held them using the profit maximizer. It's a very structured way of holding winning trades. Okay. All right. Profit taking and loss cutting strategies. Again, protecting your downside. That's a big part of trading. All right. Partial profit taking versus all or nothing exits, psychology of letting winners run versus cutting losses, time-based exits, and holding period optimization for your swing trades. The stock market changes, our swing trade management has to change with it. Partial profit taking versus all or nothing, deciding whether to sell the entire position at once or take profits incrementally. I will tell you what I do. 9 times out of 10, I'm holding the position, because if I'm scaling out, but it's working, I'm guessing. Go earn more. If you did the work and the trade's working out, I will hold your hand. I will talk to you in a game plan meeting. I will talk to you on a coaching call. I'll talk to you in Discord, but let's have a conversation about what is the proper action in that particular moment. If I'm right, I want to be right with the most shares. I rarely get out when it's working unless the circumstances change. Okay. So I very rarely scale out of a position. All right. All right, so the psychology of letting winners run versus cutting losses, understanding the emotional challenges that prevent traders from holding profitable trades. And this is by far the number one reason I challenge anybody to tell me otherwise, is you have a fear of losing unrealized gains. Now, I'm going to shatter that fear right now. You put a position on, it starts working out in your favor. You add to it, right? Well, actually, let's back up. You put on a swing trade, it moves against your stop loss. Okay, great. You accepted the loss before you put the trade on, right? Put the trade on, moves in your favor, you add, and now you lock in break even, and the second piece, as we discussed earlier in tonight's training, right? What's the worst thing that can happen? You had a small unrealized gain that comes back and you have a small loss. So the trade management is you take a loss on your initial piece, which you accepted before you put the trade on. The second decision you have is to take a small loss on the second piece that you added. So an unrealized trade pulled back. What's the third one? The third one is you keep adding and the stock keeps going in the direction that you thought. It doesn't even have to explode. It just has to keep going in that direction. So you have accepted loss, small loss, or big win. Why in the world would you get out of an unrealized profit if it's doing exactly what you wanted it to do? Don't guess how much the stock can move. Don't be afraid of unrealized profits pulling back, because you're not trading for those small wins. You're trading for the ones that follow through. And it is infinitely less stressful to say, I don't care the result on every trade. I'm more concerned over a bunch of trades. Did I manage the downside and learn how to hold the winners? You can have, again, I'll just show you the portfolio here, right? It's in black and white here. Let me zoom that in a little bit for you. Look at this percentage, right? 6 days on the downside, 17 days on the winning side. That's the reality of it. I'm not holding losers. I don't care. I literally don't care if a trade's not working out. It's gone. I'm not looking at it anymore. I don't care. I'm not married to the position. It's not an opportunity to make money. It's an opportunity to apply our edge. Write that down. That is really important. When you fully understand that, and this is really one of the reasons that people get angry when a trade doesn't work out, they mistake swing trading with that setup as an opportunity to make money. No. Because now you're saying, I'm putting on this trade because I expect to make money and nothing else can happen. But if you put on a swing trade and the stock market unfolds and you say to yourself, this is an opportunity to apply my edge and manage the trade, you're now open to any possibility, whether it moves against you or move in your favor, and you have the script before it gets put on. That's trading at the highest levels. And I hope I'm really opening your eyes up that trading can be organized in a way where it's like, oh, that's what I'm supposed to do. Let me do that next. That's what it's supposed to be like. Is that easy? You're going to learn how to do that in a day? No, of course not. But it is learnable. You just have to determine when you want to get started, right? Okay. All right, we're coming to the end here. Time-based exits and holding period optimizations. I generally don't get out of anything based on a time-based optimization unless I have a trade on and there's either earnings come out or a big economic data coming out, and I feel like I don't have enough of a head start on a position. That would really be the only time-based exit, because I don't want to put myself in a position where there's a known catalyst coming that's an unknown volatility direction. So that's the only time-based exit that I might use to exit a trade. All right. Portfolio level risk diversification or concentration. Maximum drawdown limits and recovery strategies. Remember, when you take a big loss, make it back one trade at a time. Don't try to over leverage yourself. That's really a bad thing to do. Correlation monitoring and position interdependent. Try not to be too concentrated in the same area, because if you're loading up on semiconductor stocks and they're all going up, that's great. But if you're loaded up on semiconductor stocks and they all reverse, you're loaded up on that same boat. It's better to concentrate in the industry group and then maybe work your way into other things, because the downside on that is pretty heavy. When to reduce size, take a break, or change strategies. This is a really important one here. I just want to make sure I bring this up because it's super important. When to take a break. Sometimes we could feel like the market we just can't get a good read on the market. Maybe you're tired. Maybe you have something personal going on. If the stock market is starting to beat you up, get away from your computer. Don't place a trade. Don't even look to place a trade. You'll be shocked at how coming back a week later with fresh eyes, a fresh perspective, no trades on, will do wonders. If you are seeing you're struggling and everything is like hard to accomplish and you're just not getting the follow through, or trade loss, take a break. There's going to be plenty of opportunity. Get away from the market. It's really, really important. Okay. All right. Maximum drawdown levels, limits, and recovery strategy. Set absolute losses for reducing risk. There's no other way to put it. Everybody should have a weekly or monthly drawdown level that if you hit that level, you're like, man, I'm just not in sync with the market. I got to get out of here. Correlation monitoring dependence. We kind of talked about that already. When to reduce size, take a break, or change strategies. When market conditions change and you are not in sync with those market conditions, that's when it's time to take a break. The most common time that happens is when the market goes into a trading range, there's less directional momentum and you get chopped up. So just be aware of that as a pattern to keep an eye on. I want to go over some more community results here just to share these with everybody. Again, I want to be super clear. I want you to understand that we live in the real world. Again, our community is so open with everything we do. Performance that I'm about to show you for some of these people, monthly, weekly trading results. These are real results from people in the community. But we're not talking about I made 400% and those kind of things. I want you to believe it's possible for you. That's really my number one goal. So if we take a look here, Raul, who's just really, really, really hard worker. Again, experienced actual trades with the profit maximizer. I kept trades for 2 to 3 weeks and hit several initial profit targets. So we kind of had a little conversation here. Again, completely transparent about everything we're talking about here today. Trade management and managing winning trades is the secret in trading, right? So I just want to be clear about this again. He was excited about how he was managing the trades. When's the last time you got excited about your trade management skills? You should be every trade you make, because that's really where the money's made and that's where the money's lost. I promise you that. All right. So again, I want to share some results here. Don, this is again getting back into adding to trades. This is actually from June. Just added an additional shares for the 4th time on this trade in ZS in May, and a big win for him on this particular trade. So are you starting to see patterns emerge here where the community who've been with me behind the scenes for a long time now, they're not talking about entry setups. They're not talking about candlesticks. They're talking about trade management and handling and managing winning trades. That's where the money's made. All right. And last we have here, Gani, actually, only taking A+ setups, looking for a very specific entry, but more importantly, making a difference now. It does feel like running a business. That's probably one of the biggest things that I would really like to everybody to take out of this tonight in a big way. That when you do the steps and you follow everything that I'm walking you through here tonight, it's all because I want you to understand that running a trading account is like running it's a business. You have expenses, you have profits, and it's our job to minimize the expenses and learn how to make the profits. And that's obviously what I walk everybody through, which is why at this particular moment, obviously I want to thank you for being here with me tonight, but I want to give everybody a chance to come and trade with me in the community and get access to everything, including the Trade Manager Pro that I just showed you a couple of seconds ago. So I am just thrilled to be introducing to everybody for the first time tonight something called Swing Trading Pro. We've never offered this before. So part of Swing Trading Pro is the research of the daily ticker, which is what I showed you here already tonight. It's actually a part of everything that is included with what I'm about to walk you through here tonight. The daily ticker research, which is sent out every day early in the morning. Obviously, market analysis, sector analysis, industry group analysis, research for best trends and suggested stocks for optimal entries. Plus, the archives are available in the member portal, like I just showed you there a couple of minutes ago. Okay, $1,495 just for the daily ticker. This comes out 5 days a week. Okay, I just want to be clear about that. Then the research on top of that is swing trade alerts and updates. So I want to be clear when I'm giving the swing trade alerts, and this is something that I think that's uniquely to what we do. Every single day, I write down in bullet points underneath the trade. Once we put the trade on, I give you the whole trade from the script and everything. Every single day, I'm telling you, here's how I'm looking at it. Here's what I'm adjusting. Here's what I'm adding. Here's what I'm thinking about this, and that. Every single day, you're getting that as a trade adjustment. So the big difference, I think, with something that we do is it's not just the trade setup. I'm actually walking you through the entire trade management so that you can understand how I'm thinking about making those decisions. Okay, that's very, very important. So I got you back the whole time. That's really what I'm saying. So trade scripted from entry to exit, risk management outlined, plan for scaling the winners. That's just the trade research, the trade setup, and the trade management. Now we also have an opportunity to interact with each other through live sessions. This is where you get to ask me questions one-on-one. That's a really important thing. Me, not anybody else, me. Daily game plan sessions with replays and summaries. So I actually gave everybody a heads up of what this looks like here. So you can actually see here in the morning, it's every day at 8:30 in the morning, an hour before the market opens. Go back and forth. You submit your ideas. I walk you through my entire game plan for the day. As soon as the meeting is done, we email out the summaries, including all of the stocks that we talked about during the day and why we're looking at them. And then we also have some lessons in here at the end of every one. This is 5 days a week. So the daily ticker comes out 5 days a week. All of my research comes out 5 days a week. The game plans, the summaries, and the archives and everything also come out 5 days a week. A big part of us working together. I want to really emphasize why that's important. It's one thing to have the strategies and the setups. It's another thing for us to have a discussion about it every day. That's really where the learning happens. Real market conditions, coaching sessions, all that kind of stuff, game plan sessions, everything along those lines. That's really where the learning happens. And that's the part that I get really jazzed up. And anybody who's been in our coaching sessions knows how much I love those. All right, so that's the daily game plan meeting. I just showed you that every day at 8:30. Review the market, your game plans, key levels, setups, market context to trade confidently, and then obviously replay with summary emailed and in the member portal. So you will have more than enough help from me. Just the game plan meetings are $1,995 for an entire year. So the daily ticker is $1,495 for the year. The game plan meetings are $1,995. Now we're actually going to get into implementation, swing trading Discord community, real-time conversations about trade ideas and strategies. Okay, so our swing trading floor, we discuss the trade setups and trade management, receive real-time answers on management decisions, exits, and strategies. And I want to be clear about this. Every time there's a question about trade management, I will answer it myself, and I'll say, here's exactly what I would do. That's very valuable because you need to make a decision. I'm basically walking you through the strategy in real time as possible. Swing trading, obviously, we don't make snap decisions, but I want to be clear about that as well. Okay. All right, you get notified the moment if a high probability setup is spotted, benefit from member conversations as well. A full year of just the Discord community is $1,495. Now we're going to throw some bonuses in here as well. Stock Trading Pro portfolio. I just showed you the portfolio several times here tonight. We leave nothing behind the scenes. You can see exactly what's going on. You'll see there's wins, there's losses. You can see exactly what's going on in there to know exactly how we're doing it. Nothing is behind the scenes. It's all out there for everybody to have. So you can obviously see the portfolio here. More live sessions, Saturdays. Saturday swing trade review and game plan, a dual lens of perspective on the market. So it says dual lens here for a very important reason. Myself and John Napolitano, who is a fund manager, it's a $40 billion fund. He specializes in options. Every Saturday, we have a 1 hour session where it's an open mic. You guys can ask us questions, and John and I give a recap of the market that just finished for the week and how we're expecting to trade the following week. We give a review of the markets from both the stocks and an options perspective, followed by your Q&A. Could be an options question, it could be a stock question, it could be a trade question, it could be a coaching question. Just those calls are $995 per year, and you get the summaries and the replays as well, by the way, if you can't make the call live. Another bonus is the implementation, the Trade Manager Pro Swing Trade script, which is what I showed everybody here several times tonight. The script is a part of this membership for Swing Trading Pro. It's long and short positions, gives you everything from start to finish. You can see the entire trade mapped out here from start to finish. Again, takes all the emotion out of the trade. It's completely scripted before the trade gets put on. Scripts the trade from start to finish, includes entry, stop loss, when to add shares, how to manage trade adjustments as prices move. Could not be any more simple. You just have to follow the plan. Value for that, $495. But I think we can all agree having that Trade Manager Pro is worth 10 times that. Just one trade. Just one trade. All right. More, if you'd like to learn a little bit more, this continuing education. We also have Swing Trading Academy, which is a home study course. If you happen to be brand new to swing trading, Swing Trading Academy has 3 modules: understanding order flow stacking and the roadmap. So if you took a look at what I had over here, this is my order flow mapping technology, where I'm basically mapping out every single day what's going on inside the market and how I'm seeing it. So the order flow stacking roadmap helps you understand how I'm coming up with those numbers, creating a trading plan and a game plan. So there's 2 very big differences there. A trading plan is how we're going to define our edge, manage risk, and manage capital per trade. A game plan is how we plan to allocate that money on a per trade basis. So the trading plan is the higher picture stuff, and then the game plan is those meetings that we have every day at 8:30 in the morning. That set of videos shows you how to create a game plan to bring to the game plan meeting so we can have a discussion about it. Okay, very important part of the process for us to work on together. Okay. All right, so the course alone, obviously 3 modules. It's pretty long. I think there's about 20 videos in there, $995 just to access the course. And then we have some more continuing education. This is probably obviously the big one that everybody wants: coaching AI access, 24/7 access to the coaching. This is on demand. It's basically built off of 85 hours worth of coaching sessions. And you basically just go in and ask any question anytime. But we actually made this even easier for you. If you could just give me a second here, I could actually show you how this works. So we go into the coaching. We have an AI coaching library. Again, depending on your membership. So let's just say, for argument's sake, we're talking about here. You can see we've actually created hundreds and hundreds and hundreds of prompts already for any question you could possibly have in our software, in our system, I should say. So let's go here. Discuss current opportunities in both day trading. Let's do this one. How do you calculate edge share? So we pop that question in here into the AI. It's basically going to go into the 85 hours worth of sessions and come back with the answer. So you might be shy. You might have a question at 2 o'clock in the morning. The coaching AI is, besides the Trade Manager Pro scripting, the coaching AI and obviously the daily ticker. Those are really the big things that everybody wants, which is why it's a part of this as well. So you can actually see how hard it's working behind the scenes. It gives you the complete answer 24/7. And what's kind of cool about this too is we actually went into and built the AI out to basically say, what are all of the common questions for everything that somebody could possibly ask any time of day and get an answer immediately, right? So we can actually, let's just pop this one in here just to give you another example of it. Just copy and paste it. It goes into all the coaching and comes back with the answer for whatever you want. And again, like I said, every single thing you could possibly think about has been built into it, including the profit maximizer, the approach to the profit maximizer, profit taking considerations, how to implement the power pyramid. And you can see how it's kind of working here. This will be available for you 24/7, 365. Okay. You can see it's still going through it. It's going into 85 hours worth of coaching to give you the exact answer at the exact moment that you want it. We're super proud of the AI. It's really a tremendous addition to what we do. Get instant answers to your trading questions. If you want the question answered before the Saturday sessions, library prompts covering every scenario, like I just showed you, and the value of the coaching AI for the entire year is $995. And you can actually see how it could be much, much more valuable than that because it's really going into everything we've ever taught. More continuing education. We also have tutorials for software and custom scripts for Finviz tutorials. And then we have custom scripts for Thinkorswim, TradeStation, and TradingView. So depending on what software you're using, we also have videos to teach you how to set up the order flow stacking and the optimal entries within the software as well. Very, very important because obviously it's one thing to know what we're looking at, but how much better is it when the software actually says, here it is. That's why those the implementation videos and the tutorials for the software are very important as well. And again, obviously, it took us years to put these things together. So just the access to those platforms and the custom scripts that we're building, that's $1,995 value as well. And we also have an onboarding session. This is something that's really important to me because when we have new members come into the community, I actually want you to use it. And the most important part of using it is for us to show you exactly where everything is and make sure you have access to everything and say, here's where you can find that. Here's where you can find that. It's actually a Zoom call. And we literally, you log in and we share a screen and we walk you through everything that's in there. The onboarding session is very important because I want this to be a very smart investment for you. And I want it to pay massive dividends over the next 12 months that we're working together. Okay, so it's very important to understand the value of that session. All right. So it's your personal guide to the benefits of the program. We want to maximize your experience as much as possible. As you can see here, it's a Zoom call. Personal guide, completely dedicated to you. You decide what the call is, when the call is going to be on your schedule. We'll make it work for you. And again, obviously the onboarding is done in live. So we have somebody dedicated to that. The value of that is $99. So tremendous amount of stuff in here. But I think the most important part that I just want to get across here, what we're talking about right now for Swing Trading Pro is an annual membership. So that might seem like a lot of stuff, but there's a lot of time to take advantage of everything that's in there. And even if you don't have a lot of time, I'm giving you the research, I'm giving you the trades, I'm giving you the trade management, I'm giving you the swing trade script. And then if you want to go a little bit deeper, there's all the other courses and the AI if you have any other questions outside of that. So we've really got it covered from start to finish. At this point, it really just have to ask yourself, after everything we talked about tonight, can you see how trading, specifically swing trading stocks, can be really, really fun and profitable if done properly and you follow the steps that we've been talking about tonight. And I really hope that we've done a good job to help you feel that way. So again, just the entire part of the program here, got the daily ticker research that I do 5 days a week. We have the archives. We have the alerts. We have the updates. Again, that trade management update is really important. I don't leave you high and dry. I literally walk you through every single day what I'm doing. Very, very important. And actually, you know what? I'm going to give you a little bit of a sneak peek. We actually do have the stock alerts here. We actually have every single month. I just want to give you an idea of the depth of what we do. So you can see here, actually, let me actually make this a little bit bigger. You can actually see here, once the trade is put on, every single day, I am walking through my thoughts of everything that I'm looking at in that position and why. So you literally have the chance to learn from me on every single trade that we put out there. And you can start copy and paste these things and make them a nice little archive for yourself. And then maybe sometime drop them into your own AI, drop them into ChatGPT and say, what am I missing here? What am I not getting based on order flow and all those kinds of things? So every single trade, I'm walking you through what I'm thinking. And we have a whole archive of that as well, which I think is really kind of cool as well. Everything is built around me wanting you to succeed. That's really the biggest thing, right? So game plan replays, they're every day at 8:30 in the morning. If you can't make the live call, you could post something for me to review. I give you a rundown of everything that's going on in the market, what I'm watching. Then we have the summaries and the replay and the lessons from every game plan meeting available to you in the archives as well. We have our Discord community, which is a whole channel. You can put that on your phone or on your computer. So the bonuses have a value of $5,574. And then obviously we have the swing trade portfolio, the Saturday sessions with me and John Napolitano, Trade Manager Pro, scripting your trade out from start to finish, Swing Trading Academy, those 3 courses that I just walked you through. And of course, the coaching AI, which is the part that everybody wants. Just give me the order flow answer right now. It's 2 o'clock in the morning and I can't get to sleep. And then of course, you really level up when we have the software tutorials and the scans that are pre-built. So you can make sure that not only do you understand what you're looking at, but now the software is going to do a little bit of a job for you and tell you exactly what's going on and when, like I showed you before. So the whole package, everything that's combined there, has a value of $10,559. But obviously the retail price is $1,900 as we package everything together. But if you take action and get started with us right now for a limited time, it's only going to be $995 for the next year for everything that I just discussed. Now, I just want to really kind of talk to you like heart to heart. We covered a lot of stuff. It's almost 2 hours right now. I poured my heart and soul into this to really make you believe that swing trading stocks is the world's greatest business. And when it's done properly, I'd love to be the person to walk you through to learn how to do this so that you have this skill that you take with you for the rest of your life. It's not day trading. It's a lot less stressful than most people make it out to be. And understanding how to build positions, manage risk, find great ideas, and work with me personally in the community on all these calls and get the AI. The ROI on $995 investment for the next year working together for you to have this skill for the rest of your life, it's really kind of a no-brainer. It's really just a question at this point, is now the right time for you to get involved? Because obviously this is a limited time offer, but I really want to make sure that you stuck with me this entire time. You're watching the video, and I want to take care of you. So it's very important to understand that this $995 is my gift, basically, my desire to get you started and to thank you for being here with me for now 2 hours on this call. And I hope that you take advantage of this. It's a 90% savings from everything if it was all individually purchased a la carte. So what you could do is take your phone right now. You can see the link on the bottom there if you want, but you can actually hold your phone up to this QR code, and the QR code will actually take you right to the page to get started. So hold your phone up to that, put your camera on there, and it will take you right to the page to get started. I hope that I've done a good job for you here today to really kind of open your eyes and to think about the stock market and to think about swing trading in a different way, where you're going to be running a trading business that has expenses for losses, has profits that you're learning how to make. And let's go do that together for the next 12 months. Let's have fun. I'm doing the coaching. I'm doing the game plan sessions. I'm doing the Saturday sessions. You have access to the AI. You get the script. You get everything. Come and join me. I'd love to have you in the community with me. If you have any questions at all, in the description below the video, there's support at stocktradingpro.com if you want to speak to somebody before you get started. But I want to be clear. This is a limited time offer. Get started as soon as possible, because this is not going to be the price or the investment for a very long period of time. So I hope we did a great job tonight to get you excited. I'd love to see you on the other side. Hold your phone up there, and you can also find the link directly below the video as well. Okay? So have an amazing, amazing day, everybody, and I will speak to you soon. If you have any follow-up questions, leave a comment below. You can grab the link to that page to get started, and it automatically will have the code for you. And if you have any questions, you want to speak to somebody before you get started, support at stocktradingpro.com, and that's also below the video as well. All right. Have an amazing, amazing night. I'm so grateful that you're here with me tonight. I hope to see you on the other side. I want to see you make this investment in yourself in the next 12 months, and it'll be us working together. All right. Have an amazing night, everybody, and I will speak to you soon.